Thank you once again for joining a Payments Cards and Mobile webinar in association with Visa. My name's Alex Roll. I'm the Managing Director of Payments Cards and Mobile, and I'll be hosting this event today. For myself and all the panelists, I hope you're doing well. Looking forward to another insightful webinar. As per usual, a few housekeeping items before we get started. This is a live event, and there will be a live Q&A session at the end. However, do feel free to send your questions in as we're going along. And if your question relates to a specific topic or speaker or slide, it's really useful if you note that down in the question so that we can quickly reference back to it whilst we're answering those questions. Finally, as you may be able to see, there's a handout section in the top right-hand corner of your screen. And there's a document in there for you right now. You can access that and use that. And it's associated to this event. On that, all of the content for this event, including the recording, will be shared with you at the end. That means you can review it on your own or you can share with colleagues at your leisure. So that's the T's and C's done. Let's crack on with the content. And with that in mind, I'd like to introduce Mathieu Altbecq. He's Head of Product and Solutions UK and Ireland for Visa. And Asley Alatan, who's Head of Everyday Payments at Visa Europe.
Hi, guys.
Guys, say hello.
Thanks for having us, Alex.
Hello.
Yes.
All right. Brilliant. Well, welcome, everyone, and thanks for taking the time to join us this morning. Asley and I are very excited to cover some content. I'll give you a little bit of background, an overview of what we're going to cover today. So we're looking at the future of everyday banking and everyday spend. We will give you a summary of the changes and the dynamics that we see in the market. We'll spend time on the results of 2 studies that we've conducted, compile the content of this session, specifically around customer needs. What do we see across the UK customers, some of the changing behaviors? We'll spend time on 2 specific examples of how certain players are reacting to these consumer needs and how they are affecting and transforming their proposition. We'll look beyond, we'll try to think in terms of big trends that are affecting these new proposition and how we need to reflect about these to take and design the proposition of the future. And then we'll obviously invite you guys to continue to reach out and work with us and see how we can continue to help the industry as a whole to address the challenges, but also the opportunities of the everyday spend of tomorrow. All right, so let's crack on. I'll give you a brief overview. Basically, we've done the content of this presentation today is the results of 2 main sources. The first one is we've done a very recent quantitative survey with more than 1,000 UK customers across segment, across age group, to really get a sense of their latest behaviors, changes, needs, and preferences. We also looked at another global study we conducted specifically around PCA, personal customer accounts, across 11 different markets, both in Europe, obviously in the UK, but also globally, and pool some of these learnings together. There are 4 things that I'd like to cover in terms of key outcomes. The first one is certainly the ubiquity of the digital behavior of consumer. I think we are really past this early stage of adoption for digital attributes, or consumers really have reached another level of maturity across segment and across age group. And we have some very interesting facts now. So we have more than moved into the digital era. The second dimension is that we know and we understand better what consumer value the most. And so we'll spend time defining what it is. Here you just see one example on that page around transparency and control, but there is clear elements that the consumer starts to value the most. And by focusing on these, we believe we can create differentiated proposition. We will talk also more about a few potential scenarios around embedded finance. How do we see the dynamics playing out when it comes to traditional banking, more futuristic, fintech-enabled, enablers-led financial services, and we'll try to play out these different scenarios. And then finally, I think one of the key messages from that is that the need and the race for differentiation is stronger than ever. And it certainly requires many more dimensions and covers many more dimensions than it used to. So I think we are in a space where further differentiation across multiple dimensions is more than ever required if we want to differentiate ourselves and if we want to play at the table of the future of everyday spend. All right, so let's go into a little bit more details. There are 4 key drivers of change or key changing dynamics that we need to address. The first one is consumer preferences and merchant pool. The second one is fintech proposition, but also infrastructure and how technology is enabling changes at scale. There's proliferation of consumer choice and payment choice. So the complexity of the payment landscape is clearly increasing, but it's also not deterring consumers. We see that they're adopting multiple payment dimension and payment methods. And then finally, there's a regulatory driver that's pushing that. So if I go into a little bit more details for each of these 4 points. So on the consumer side, as I mentioned before, there is an ubiquity of how they're thinking about their life in the digital world. I think a couple of things we observe is that when we say the consumers are lazy, consumers have been habituated to highly personalized experience. This is primarily driven by the merchant side. And when I say merchant, I primarily means consumer internet businesses that are solving digitally for problems in the real lives. So if you think about an Airbnb, if you think about, it's not just retailers, it's really internet businesses on the consumer side that are solving for everyday life problems using advanced consumer experience and most of the time highly personalized experience. So you see that on Airbnb. If you log on your Airbnb, you will have your own curated experience based on your previous interaction with the platform. Same is true for your Netflix experience today. It looks very different from mine if you given the track record and the history you've built. Same is true for Instagram. Same is true for your Amazon shopping. So we see more of that way beyond just the traditional retail. So consumer businesses online are really helping and habituating our consumers for experiences that are personalized. So personalization is not longer a fate of the past or something that may happen. It's something that consumers are now expecting. And so the question for us is, how do we translate that into financial services where we know it's harder and we haven't seen the same level of personalization. But what we see is proposition that becoming more personalized and closer to the consumer need. The second dimension is what we wrap under fintech proposition and new technology. I think here it's clear that not only fintech, and when I say fintech, I mean agile technology is driving this new proposition. There is a real correlation between the ability to have modular tech and modular stack and the capacity to develop new, flexible, agile consumer proposition. Yesterday alone, I was here in our UK office at Visa, and we had one of our clients from Australia visiting, and the CEO from that small mutual bank we were talking tech and talking stack. And he confirmed that despite being relatively small, one of the big things they had to do was to completely deconstruct their core banking system, to strip it from a lot of things that they had built over the years, keep it to the strict minimum and core banking functionalities and primarily payment functionalities, and rebuild the layer of additional value-added services using external partners. And so they really made that transition in order to be able to be flexible. And it was quite ruthless with how they would manage these different banking as a service or payment as a service by really providing the right level of solution they needed and having the flexibility to change if over time these solutions will no longer meet the need of their consumer. So I think there is a real thing that's happening, and it's no longer something that only a few banks can afford. Even the smaller mutual bank with a relatively domestic business are now able to do this transition towards more agile technology. We talked about proliferation of payment method. Unfortunately for us, it's true. I'm afraid it's not only a card world. There's much more than that. And we see that complexity being pushed by regulation, being pushed by competition, but also being embraced by consumer. The fact that consumers are willing to hold multiple wallets depending on your use case, they are agile with their digital ubiquity in switching from one payment methods to the next, also complexify the payment landscape. And so we need to be able to reflect some of that or capture some of that opportunity, because it means also that a standalone proposition that has a very clear proposition could potentially coexist with the rest of the alternative payment methods available out there. And then finally, we talked about regulation. I think if you are joining us from the UK, you would know that the regulator is playing a very active role in driving some of these innovation and changes. If you think about SCA or if you think about open banking, both of them had significant impact on the user experience. So if you think about authentication, the way it was done and the way it had to be done, that has changed the way the consumer experience worked. If you think about data access for open banking, that also has changed the way the consumer experience could be then rendered. With more data access, you can start to have multiple consumer experience, global view on your account, and it simplifies some processes. And then also on the customer choice, open banking, for instance, is also just enabling more payment options on the market, and so therefore increasing the customer choice.
Actually, can I just interrupt there for a second, if I may? So you've spoken through the drivers of change from the issuer perspective, and in some great detail there. Thank you. Given your perspective as a network, how do you see the merchants playing in that bigger picture?
Yeah, no, I think merchants are, I think I alluded a little bit to it. Alex, thanks for the question. I think overall the statement is we see more and more of a play and a role to play for merchants. I think they are driving an incredible amount of dimension in today's everyday spend and everyday banking. The proliferation of payment methods that we talked about, that's also, driven by the merchant. They are the ones presenting them. They are the ones promoting them. They are the ones excluding them. So it needs to meet some certain of their needs. So they're part of that dimension. The overall experience, how many clicks, how many steps, how easy it is to access one payment experience versus the other, is also within the merchant realm. So customer choice is highly influenced by the role of the merchant. The way they are recognized, the way they authenticated, the way the experience is personalized when they shop is also, driven on the merchant side. And the funding options that are being offered, if you want to pay straight or if you want to pay in installments, we know that merchants are participating, sometimes even funding some of these short installment loans for the consumer to have more options to pay. So I would say that ultimately, if you're really focusing on the purchase journey, it will start with the merchant. They will be the ones driving you to their environment, and then it will end with the merchant being the ones that confirms, that offers the service post transaction or post purchase. So that's clear. And so they are the ones also driving and adopting innovations for what I call innovation at the time of payment. And so finally, as a network, when we think about both sides of the equation, it's becoming incredibly more important for us to be able to drive, the acceptance side and the issuing side. And I think it was relatively easy when you had a plain vanilla solution, when it's simply an acceptance of a relatively simple form factor. But I think that is completely changing. And every single new solution needs to have a high level of enablement on the issuing side and a high level of enablement on the merchant side. So I think we see clearly that complexity now as we're working across multiple solutions, and we have to enable these usually on both sides of the equation because without the merchants, you don't really see that innovation taking root. All right, fantastic. Thanks so much for the question, Alex. So this gives you an overview, and as mentioned earlier, we would like to spend some time on the customer needs. So I'll hand it over to you, Asli, and if you can start sharing some of the key highlights from our study.
Exactly. Thanks, Mathieu. So basically, with the research that we mentioned, we try to identify the customer needs, which the influences that impact their payment behavior today. But at the same time, basically what they're looking for the future, and therefore for our issuers to take that into consideration for their sustained growth. And staying relevant as payment options change. So let's get into details. So firstly, we looked into how the UK consumers currently make their payments at home and abroad. And what we see is predominantly from the respondents, we see that 71% of the respondents said that they are using their debit cards when used domestically. And this is pretty strong. When it's face-to-face, they are also using their digital wallets. So we see, as Matthew also mentioned, like digital is ubiquitous and we are seeing more and more. So people are comfortable using their wallets face-to-face. And when it comes to e-com, basically we see a more balanced approach in between using the different credentials between debit and credit. This, however, shows a difference when our consumers travel abroad. We've heard from the respondents that cash is still a preferred payment method when they go outside of UK. This is followed by debit cards and then credit cards. And there are interesting findings as well. When we dig into the demographics of the respondents, what we observe is for the youth or younger segments between 18 to 34 years old, when they travel abroad, we see that they are still using debit cards as the primary method. And, you know, you wouldn't be surprised to this because, like, I think they were also the first users of the propositions of Monzo, you know, Revolut, Wise. So therefore, they are the early adopters. And then that's followed by cash. And when we see that there isn't necessarily a, you know, tendency for credit use traveling abroad. Whereas when we look into the older generations, we see alongside with cash use, we see credit card use still. So I just want to highlight that, you know, there is a new generation which is coming and having really different needs in comparison to the earlier ones. So let's look into the next. So we've asked what features basically that consumers value most and whether their banks is currently providing these features or not. So on the left-hand side on the graph, you see the blue bar lines are the features listed in terms of priority, and the orange one shows in comparison if consumers see this feature from their bank. And you see that there's a gap, and with each gap, there's the opportunity. I just want to share the key takeaways. You'll be having the document, so I'll not go, you know, through all the features. But what is, I think, a highlight was the travel notifications, which in fact you would also associate this with the cash usage that I have covered in the previous slide. So when we asked the consumers whether they would like to get notifications if they had informed their banks of their travel plans, basically real time with the rate applied, as well as the geolocation of their spend, they valued this feature as the top, feature, as you see on the chart. And it's interesting, this is even more important than having an FX, easy FX exchange, which you see at the bottom of the chart, as well as, real FX rates. So it's even more important. So if we compare to cash usage, they know how much cash they spend. They don't have in their minds. So therefore, they're in control of their spend. So similarly, if they had the transaction notifications, they would be in the control. So I think this is an area for our issuers to really lean on. There is this cash spend cross-border and how basically we can tap into it and generate more revenues and create value to our customers is something that we can go forward. The second important key message is transparency, and it's really vital. If you look at the, forthcoming features like card transaction controls, the digital receipting so that they see the contents of their spend, as well as, card on file, the merchants that they provide their credentials to and where their spend is. I think more and more cardholders require this transparency. They want to be on top of their, finances, and especially their hard-earned money nowadays. So that is critical. Banks, issuers, financial institutions should really provide that transparency to their cardholders. And the third key element is, we've talked about digital ubiquitousness and instant digital issuance. What I mean is having the credentials issued by the financial institution, and at that moment in time, basically provisioned into the digital wallet is what consumers expect nowadays, because they've seen the examples. It's an excellent experience, and basically they're able to use it right away. So just a note on that. So we asked also the consumers a little bit more on the digital instant issuance. It's a great value for the cardholders, but at the same time, as you're seeing on the details of this slide, basically it's a great way for the issuers to initiate early month-on-book activity. And the reason why I'm saying, like, we took two groups, the ones who have the instant digitally issued credential right away in their wallet, and then the second group where they have waited for their physical cards, and when they received it, they added to their wallet. In between these two groups, there's a clear differentiation, because we've asked, when do you first how soon, you make your first payment once you put it in your digital wallet? And the answer is basically, with 39%, the ones who have already provisioned in their wallet spend it right away. So what it means is, it just, creates, first of all, a wow experience. It's out there ready when they need, and they just use it right away. For their bank, I think it creates loyalty as well because of the experience. They tend to spend more, so it's the top of wallet preference as well. And for the banks, just to capture their customer right from the beginning and then drive their usage experience. So overall, this is really needed. And the last one is basically, we asked, and it's an important question. We said, what would it take for the cardholders, customers, to change their current accounts? What would it take? What kind of incentives? And as you see, consumers still value cashback offers as well as merchant offers. So and I think, again, it's not surprising, because we really want to take value out of our overall spending behavior to the much extent we can. So, and we've seen in the UK market, for example, that cashback offers have been in play even during this challenging economic times. Like Nationwide did a supermarket cashback offer campaign, 5% cashback for their debit card holders during springtime, which was really successful. And also we've seen issuers like Chase, when they entered into the market, they provided cashback offers for new acquisition and for your 1 year of loyalty to the bank. And with each and every debit transaction you spend, you get a cashback offer of 1%. So they are the movers. They got a lot of acquisition out of it. And one more interesting, again, in this one, and you'll see the basically the saving roundups. So consumers are also expecting their financial institutions to help them save. You see on the list, for example, there is financial well-being tips. It's pretty, on the later stages of the prioritization. So rather than the tips, they really request their banks to proactively help them save through roundabouts. So give me value for my spend and basically help me save alongside is the key message.
Well, just good one. Just to interrupt there again. Sorry, you're mid-flow, but I had a question that I wonder if you have any insights into how issuers can find that kind of happy equilibrium of retention and attraction of customers without putting any kind of unsustainable strains on P&Ls through cashback incentives or switcher campaigns or such like.
Maybe I take this one, Alex, Asli. Yeah, it's a good question. And I think what we see in the market, this is becoming more and more of a challenge, and for banks and for issuers, especially here in Europe in a low interchange environment. I think the funding of some of these engagement and retention program and even proposition is being challenged by the lack of funding available via the traditional interchange channel. So if you are making 30 or 20 bips per transaction versus 1.5% to 2% across other markets, then certainly it changes the nature of what you can give back and how you can share some of that value to your consumer. So as a consequence, what we see is that we are incredibly looking for alternative sources of funding, but also sources of engagement. And so maybe as a key takeaway for you today, I would say I see three things that can help shape a program. The first one is, how do I bring the merchant back into the picture? And so having access to a diversified set of merchant-funded offers is one way to get access to extra funding. It comes with its own sets of challenges because you need to still curate, manage that sources of that network of merchants and that content from merchant that needs to be relevant. And equally, merchants are willing to pay only if they can easily access consumers, they can target specific consumers that are relevant for them. So it's not, the times of always on offers where a merchant is just willing to give 5% cash back to everybody. One, doesn't drive a ton of value for them, and ultimately, they have better ways to target consumers. So you need to be able to target. That's number one, bring merchants into the picture. Number two, think about loyalty beyond transaction. I think that's also another trend that we see, and we tend to call that whole of bank loyalty. So how you create a program that starts incentivizing behaviors across a wider portfolio of financial services, so gives you access to a wider pool, because if you just have to finance from transaction, then you are being constrained to your own sets of funds or eventually merchant funds that are difficult to get. So if you can have a whole of bank loyalty, that's an opportunity. In order to do that, you need alignment across dimensions or departments and functions within the bank. So you need to have a holistic view on your profit pool and lifetime value of your consumer, which is also a challenge, organizational challenge sometimes we see at our client. And then you need a platform, right? Because you could have campaign-based platform and tech that enables you to do that at the transaction level, but you need a new sets of capabilities if you want to be able to run what we call whole of bank or whole of financial institution loyalty across multiple service lines. And then finally, I think you need to think about engagement beyond financial incentive. I think some of the learnings and insight that Asli shared show that consumers value a ton of features, financial services, way of delivery of these financial services that are not necessarily financial incentive. It's not just about giving money back. It's also creating transparency, helping them better manage their finance. The financial advice, which I think is a space that will continue to grow, is net value and net perceived value for the consumer, which drive engagement and drive retention.
Brilliant. Thanks, Mathieu, and apologies, Asli, for interrupting your flow there.
No worries. I think, well said. So, to wrap up on the consumer research, basically, as Mathieu was saying, both the UK consumer research as well as the global study analysis has resulted in 5 key segments, which in terms of what consumers expect. So the convenience and immediacy is definitely, one thing that we've already talked about. Consumers want their financial institutions to recognize them and basically reward them. So personalized offers will be really key going forward. A smooth digital experience is all that it counts. And, with all the changes on that is, again, a must have. And again, with all the complexity that's brought in comparison to the earlier times, security is utmost important. Consumers want to feel safe when they use their, money and credentials, either physically online or any other payment methods. So whatever the method is, security would be the utmost important thing that they would expect. And transparency, we've talked about it, transparency over their money. So these are the key things that's required. And over and above, again, I want to highlight, so the Gen Z cohort, we need to be mindful because these are a big demographic, segment, which is the consumers of now and also for future. They are different. Their needs are different. They are digital first, preference of debit, at least we've seen until now. And they are very much open to other payment mechanisms, like Mathieu was alluding into. So we need to be mindful for all the value propositions that we develop for this generation today and for years to come. The second one is, we've talked about the wallets. It will be more and more, inherent in everyday life. Alongside with wallet developments, we also, in some of the markets, we see the, super apps that is taking in place. Again, driven by, the market as well as the consumer needs. And basically, there will be fierce competition, again, alongside with other payment options from the, fintechs or other providers. So the financial institutions basically have to really strategize and make plans to cater for all these changes, to be still, sustainably grow the revenues and still be relevant. And finally, we've talked about, again, like personalized, offers, cashback, discount to make your spending valuable and worthwhile. So I'll now, have Mathieu speaking about the key players delivering value to segments in the market.
Yeah, absolutely. Sorry, Mathieu. Just a quick question on that slide from my side, and once again, sorry, apologies for interrupting. Yeah. But from in your opinion, is it the consumer's behavior that's changing the way everyday payments are being offered, or is it the other way around, that issuers can influence and lead that innovation in terms of the use cases and propositions that they give to the consumers?
Thanks, Alex. Yeah, I think, as we see, it's a chicken and egg. They go hand in hand, right? The behaviors change. And what we see is basically the providers coming up with solutions, innovative solutions to capture these behavior changes. But I think also the other way is happening as well. So again, players are bringing in, innovation with new advanced technologies where consumers are not even aware of these kind of solutions. And that impacts their behavior. And then, they start utilizing those solutions. So it will go hand in hand. And I think it will even, we will see even furthermore how they impact each other going forward.
Great.
I think it's a great segue. So we wanted to give, to basically bring some of this learning in practice. And we just selected 2 examples of proposition we've seen in the market recently that we think are qualifying and already addressing some of these consumer behavioral change, some of these dynamics in the market that are influencing and pushing and ultimately driving the future of everyday spend. So I'll share one example, and then I think Asli, you'll share a second one. So I'll start with a global money account, which has been launched earlier this year by HSBC. And I'll tell you a little bit about the proposition and how I think it meets some of the trends and the changes that we see in the market. So it's a digital first, completely standalone proposition that they've launched on the side. It basically targets, what's interesting about that is that it's not embedded in part of the existing solution, which is obviously already designed to target specific segments. So by keeping it on the side, it enables them to target across their segment. While we know we have money management and international money management needs across segments. So that's an interesting way to be able to target across horizontally through your existing consumer base. Then from a proposition standpoint, it's digital first. So doesn't, the card comes, but you can use it without the card. The card is optional. It's relatively simple in terms of the proposition. It's really focused on international money movement. So as you can see on this page, you can send money fee-free across 55 currencies and in 200 countries and regions in the world. You have multi-currency debit card at no extra cost. So it's very much focused on cross-border spend. You can spend and withdraw cash with no HSBC fees, right? So there is no specific fees for withdrawing cash, which can think a bit antinomic and contrarian to the purpose of that card, because you want to actually use the card to be spent abroad, but you're actually not going against a potential consumer need, which is or willingness to have access to cash. And then finally, you still enable them also to store currencies to store money in different currencies ahead of travel, so it doesn't have to be just about travel. It's really about international money management. So that's an interesting proposition. So how does that connect to some of the things we've shared so far, the trends, the dynamics that we observe in the market? So the first one is that this was launched by a traditional player, and very much based on an open architecture. They have outsourced a series of the services that powered that solution. Bank as a service layers to manage multiple accounts, treasury as a service layers to manage the FX part of the proposition. So that's one. And two, they managed to launch that in really a record time from time to launch. So that was really done fast and quickly because of that choice of going external, because of that choice of decorrelating that proposition to the existing, current account, PCAs, or existing card proposition. So that's one. I think that's quite interesting, and it reflects some of the items and the dimensions that we mentioned, and especially true for more traditional players that historically we said, less agile, less easier to get to market, slower to get to market. So I think that examples really contradicts and shows that there is sufficient service enabled and available in the market to change that. The second thing that's interesting is that it brings back customers to their existing proposition by having an extra feature while it sits aside. Actually, it's driving their consumer back into the traditional PCA. So you're using an external hook to be able to bring your consumer back and closer to your relationship. So you're adding a feature, but it doesn't have to be on top of what you already have. It can sit on the side. And even if you target your existing customer, it will actually bring them back to your current relationship. And it's true, they have alternatives available out there. And so if you don't provide that solution, you will start to see your PCA being used for certain use case and alternative being used for other use case. Now, what HSBC starts to see is that they have more holistic relationship with the user that are now using global money. And then finally, there is value in this proposition on both sides. For HSBC, it's clear that this targets, international spend. So we know there is a higher interchange there. So there is, a business case that makes sense from an HSBC standpoint. And there is real value for the consumer because the needs, the features that we talked about are really valuable for them. And there's a willingness to pay for that. The beauty is that for them, it's relatively fee-free. So it's not like an extra cost that they need to pay, but there is this interesting and nice value exchange. And then finally, how does that example answer some of the chicken and egg questions of consumer behavior? Is that changing the consumer behaviors? So maybe one data point for our audience today that's interesting is that what we observe on traditional PCA and debit transaction is that European ATM withdrawal, so account usually for 40% of the card spend. So people, when they travel abroad and they use their debit cards attached to their PCA, they tend to withdraw about 40% of the spend that they make abroad. So in 40% of the case, they tend to withdraw the money and spend the cash in the country they are visiting. What we observe with a global money account, so with this HSBC proposition, is that the amount that is being withdrawn is actually much lower than this 40%, which means that they're managing with a clear value proposition to change the consumer behavior. for their specific segment. So they used to be on par with the rest of the market at 40% average of withdrawal on ATMs. Now they're managing to get that spend or that volume or that share lower than that, which means that even if they offer that withdrawal for free, they still manage to get it lower because there is more value. People can, load and change currency in advance of their trip. They can use that to park and save money in advance of a trip. And then they have the confidence to use that card when they spend abroad because there is notification, transparency on effects, visibility. So you feel in control and empowered. And so you're addressing what cash typically used to give you back in the days in an analog format. So that's for HSBC. And then Asli, over to you for a second example.
Yeah. So I would like to give a very brief update on the example from Sweden, Lunar, a digital bank. In fact, Lunar is on the other extreme. They are a completely digital player. And basically, if we think about the points that we have identified as what consumers expect nowadays, I think they tick all the boxes. So excellent, user experience digitally, data-driven, personalized service. And what we see is, because they don't have any physical branches, basically a Lunar customer would be able to get all the, product set that they can normally get from traditional banks. But over and above, I think they have really targeted those customer segments, which is, financially savvy. They want to do their own things. So all the investments, all the, budget controls and the transparency element that they were looking is also added. And also one important identifier or a differentiator, let's say, which I find very interesting in this proposition is the purpose-led banking, which, for example, with their Project Blue, Lunar seeks to, have their customers also contribute for cleaning of the oceans from plastics. And as their customers contribute to this, wider objective, Lunar as well tops up that contribution, and they have a positive impact as they do their financials over the period of time. So I think it's a great example of a super sleek user experience and disruption in the market. Over to you, Mathieu.
Thanks, Alex. So how can we think about what we've learned so far, but also, and how do we translate that onto some of these big dynamics that are changing the future of everyday spend? What are the ones that, we believe we should keep in our back pocket, in our whiteboard as we design the new consumer proposition? And so I'll walk you through 6 of them. There are many more, different ways to split it, different ways to name it. So I'll try to give you a little bit of context, but hopefully that's a key takeaway page of the things that we know are starting to really pick up and will continue to make a difference. And then I'd like to give you 2 examples of projects that we see happening across the industry, across the UK market specifically, and how these different dimensions starts to influence these projects. So you can bring them into a bit of perspective. So the first one, we talked about it, that's infrastructure and enablers. We need that flexible tech, and more flexible tech is available. So we need to play with that. We need to be comfortable using that, making the change in our infrastructure to be able to do that. We reflect of these needs also at the way the network type of solution can be consumed. And I think we see that more holistically across the industry. So infrastructure enabler, flexible tech, that would be number 1. Number 2, multi-rail. We talked about the complexity, the increased nature of payment. Multi-rail, card, non-card, these are also big trends that we see. So how do we make sure that our propositions are capable of addressing this growing dimension? Do I want to separate non-card solution? Do I want to combine the two? Do I want to think about multi-rail, account to account, and card? Do I want to have a service layer that combines the two? Do I want to have a credit line that's available and across multiple payment options, for instance? So how do I create that? We see more and more of that. Equally as well, we think that there will be blurring lines between debit, credit, and we need to be able to create that connectivity between the use cases more seamlessly. And you'll see that also happening on the card side of things, where a single credential can start to become more ubiquitous in its funding source. And so from one credential, you can access multiple types of funding: debit, credit, prepaid, loyalty, all of that under one umbrella. It's also, merging, I would say, the rails, or merging the use cases within one set of rails. That's a big topic, and I think a lot more needs to be done. I think we're just at the beginning of a multi-rail ecosystem. Number 3, I would maybe envelope that into what I call data. Data being more available and data starting to be used more. We've talked about that a lot. Data has been on presentation and on webinars for a long time. But I think it's clear that there is something around open banking, there is something around fraud prevention, there is something around AI. So how do you use AI to use that data in a much more advanced way? How do you use open banking to get access to that data? How do you use that data to help prevent fraud? All of these are super important, especially when it comes to multi-rail, and especially when it comes to the end consumer experience. We talked about financial advice. I think that's a space that's going to grow a lot. And that's typically a very good place for advanced AI and generative AI to be able to play a role. And so that personalization will come to fruition as well on the financial advice side of things. I think we tend to underestimate the level of financial literacy and how it needs to be further coached to be able to fully use this value proposition that we design. Fourth dimension, cross-border. I think there is a reinvention of cross-border. I think we need to go way beyond travel. I think you've seen it with the HSBC global account example. It's not just money for when you travel. It's storing multiple currencies. It's sending money abroad. So I think there is a reinvention of the individual needs when it comes to international money movement. So we need to think more holistically about what cross-border means and really enable a proposition that cuts across use cases. So receive money, send money, spend money abroad, withdraw money abroad, store currencies, pay a supplier for an SMB proposition. So there is really a reinvention of what cross-border looks like, and it combines itself with that increased complexity of payment rails and payment methods. So you need to be able to send money to someone's wallet somewhere in Asia or somewhere in Africa. So you need to also have interconnectivity between these rails in order to really offer and play a differentiated role in the cross-border space. The fifth one, I would qualify this one as embedded finance. I would probably rename a little bit this one on the page. There is something around metaverse, but I'm more interested about how the different channels that we see financial services happening into are taking a disproportionate share at the moment. And so what is our play in embedded finance? And I think we'll use that as a theme to close our discussions today. So I'll come back to that. And then the sixth one, it's probably 6 and 7, digital identity and cryptocurrencies, CBDCs. I think both topics are incredibly relevant, especially in Europe and in the UK context. I think we will see digital identity continue to be a fundamental element of consumer solving for their real life problem in the digital world. I think once you have access to verifiable at the source identities, e.g. government backed, you'll be able to do much more traditional physical services into the digital world, or delivering and servicing this solution in the digital world. So we'll see much more of that, not only in the payment space, but I think that's going to continue to drive the acceleration of digital commerce altogether. And I think the UK is the same. There is a trust framework. I think it will probably take a bit more time because the market will let industry and players come together or build their digital identities in a way that's consistent and compatible. So I think we'll see a little bit more of a eat and go and test and learn at the UK market level. But I think the fact that it will start to scale across Europe will continue to drive and influence the UK market. So we still believe digital identity will be big. And then cryptocurrency, I think beyond the trading and the cryptos, I think more into CBDC, where clearly the underlying infrastructure and technology of crypto will start to change the way financial services are being delivered, from central money down to intermediary banks and then retail banks. So I think we will continue to see that, and that's an important dimension. How much do you integrate that into a PCA? I think there is probably a bit more room to grow beyond the traditional trading of crypto, which I think has its ups and downs. But I think the CBDC layer is something to look into, and especially if this CBDC layer starts to hit the retail and the end consumer, that will be something to adopt really quickly. So maybe 2 examples to illustrate some of these, 6 or 7 different dynamics. I mentioned installment. I think we see that this is really something that's happening across the world, in Europe specifically, in the UK as well. A couple of things that are required to make installment work. It's not an easy thing to scale. So first, you need to be able to issue, manage installment as a solution on the issuing side. So there is a real infrastructure play. So that hits our number 1, flexible technology. Hard to do that without necessarily leveraging an enablers. And good news, a lot of enablers are there. So one example, if you want to bring installment as part of your PCA proposition, there is a need here for leveraging a more flexible and potentially enabler-based infrastructure. You need to have a better risk underwriting, more in the moment. You can leverage open banking for that, so access to new data. So that's on number 3. That's part of your installment journey. And you typically need to continue to scale that on the merchant side. So you're going to need to have merchant adoption and potentially multi-rail. So if merchant starts to adapt multi-rail, how do you make your installment proposition not only available on cards, but potentially available on your domestic wallet if you have one, on account to account if available in the market. So you need to be able to decorrelate the funding source to the underlying rails. That's one example, and I think there is lots of development happening in that space. The second one is account to account. I think that's being driven by regulatory change. We have access to multiple rails there. There is digital identity that can help enable that at scale, potentially without the risk of fraud or diminishing the risk of fraud. You are much more transferring money directly from one account to the next. So understanding of the payee, confirmation of the payee is important. Digital identity, number 6, will help drive that. But there is also an incredible amount of fraud that's actually displacing itself towards new payment rails. As you have more traditional payment rails like card, for instance, that have been secured, have been managed over the years. So we've managed to maintain level of frauds very low. As you see alternative rails picking up, you see that fraud is actually growing on these rails because you don't have the same layer of fraud prevention that are attached to that. So that's, again, number 3, fraud prevention, access to data, moving models that have been battle tested on card rails, for instance, or on other rails into new rails, account to account rails. That's another thing that's going to be important for the industry, and that will help also PCA stay relevant. There is no point driving, an account to account proposition, offering that to your consumer, if at the same time you don't have the right fraud prevention that's attached to it. So that's 2 examples. Hopefully you can take this one as a takeaway. I'm sure there is more dimension that we could add to it. We internally struggle to just agree on what was on that page. So I think you'll continue to see that evolving, but hopefully with the examples and with some of these, that's something you can reflect on when designing proposition. And then I wanted to touch on embedded finance, maybe as our closing statement. And then I think Alex will have a bit of time for Q&A. And I think Ashley will obviously explain how people should be in touch, because this is just an overview and there is a lot more to be done at the individual level and hopefully maybe some of the questions today. So we did another side piece of work specifically on embedded finance. And I think that was a good maybe closing statement, because we're talking about the future of everyday spend. We should think about, hey, what are the scenarios? How are these dynamics going to play out? And we thought of 3 different scenarios. This is part of a piece of thought leadership that's much bigger. Maybe Alex will do a separate webinar specifically on embedded finance, but at least that would serve as a closing statement, but also a teaser. So 3 scenarios. First one is what we call bank revamped. So banks, more traditional players, manage to regain relevance. They win back significant customer relationship. I forgot to mention an earlier data set, but fintech or fintech-based proposition represented in 2021 about 21% of customer interaction / PCA. So a significant number, but yet not a majority number. So we still have loads of relationship in the hands of traditional banks, and we see traditional banks fighting back. We believe that this is probably not the most likely scenario of the 3, because yes, banks are fighting back, but I think to become again the primary driver to win market shares when fintechs have established themselves, we don't think that this is the main scenario. Probably leaning more towards the middle scenario, a fierce coexistence. So we see indeed banks that are reinventing themselves. They can deconstruct their infrastructure when they can, and after sometimes loads of investment and relatively long cycle. But they are fighting back. HSBC was a great example, and a lot of our clients are extremely active in that space. We also see that this trends towards being able to operate in platform outside of your environment is also not going to fade away, continuing to grow. So the traditional embedded finance narrative is continuing to grow. And so that's also driving us towards more that middle scenario. And I think that's probably more the short-term scenario as well, right? I don't think we're going to see a complete switch towards a purely embedded and disintermediated model. But I think in the short term, we see banks continuing to investing. We see fintech continuing to maintain, grow slightly their market share. So that's going to be the balance play for in the next couple of years, especially if following this webinar, and many others, there is a drive in the market to address some of these opportunities, to capture some of these challenges, and to leverage the dynamics of the market. And then the third scenario is more if you stretch really the embedded finance narrative towards, financial services happening more and more across platforms, clearly where the use case and where the needs is happening. And so banks need to shift their model towards what we call the invisible bank, where most of the financial services are provided by to the consumer through, experiences and via the intermediaries of platform. We believe that will happen. I think there is really a trend there. I think the power of the internet consumer businesses that we talked about that are solving for consumer needs physically and digitally, combining the two, that's really not going to change. We see that especially in B2B flow as well, where the role of platform is becoming more and more dominant. The whole SME space is a space that is platform-based, that has tons of intermediaries. And so we see a lot of the financial services there happening more in an embedded finance format. So I think banks will need to not only modify themselves to be able to offer more competitive value proposition to their consumer directly, but also use that same transformation to be able to, disintermediate themselves, or to be able to offer services in a more white label or distributed way using this partnership. And it also means, building partnerships. So you need to not only change your tech, but also change how you're thinking about your go-to-market, or you're organizing even your sales team, so that you're starting to build these relationships with these external platforms. And that's a bigger and longer term change, but we believe that's going to happen, certainly in the longer term. All right, so that gives you a good sense. Maybe back to you, Asli, and wrap up. Really time for Q&A.
Yeah, exactly. So I'm just mindful of time. As Mathieu covered, and as we've touched, there's a lot of opportunity that is ahead of us for the future of everyday payments. I think as Visa, we are on the forefront for all these emerging changes, and looking basically to continue our partnership with yourselves to drive, business for you and create value for the customers for the future. So I would kindly ask, please reach out to us. We are looking ahead for the partnership to help you drive the strategies on this way forward. So I would like to thank you for the patience, and just hopefully we have some time for Q&A. Alex, if there are any questions that's raised on the panel.
Sure. Thank you, Asli. Thank you, Mathieu. So we've raced through what has been a lot of very, very interesting content in this presentation and the answers to the questions we've had so far. So I just would remind everyone there is this handout that is kind of infographic based overview of what we've discussed. PowerPoint will be shared. There's a recording of this, so it's super possible to go back and review a lot of the very interesting content we've had so far. There have been some questions which some of the team have already answered. So let's just go to this one here. Which teams within a fintech or issuer would you typically bring together in a room to develop new propositions for everyday payments? And how do those propositions translate into products and use cases? And how should an issuer take them to market and their customers? I don't know who wants to take that one on first.
I can take it. If Mathieu, please jump in because in Visa we really help out our issuer clients on this front. So basically, I think it takes a lot of parties internally as well as externally where needed, as Mathieu was alluding into as well. So the product teams, the marketing teams, the finance teams for the pricing profitability, the legal teams in terms of adherence to the regulations in any given market, and basically the strategy teams as well, just to provide in the market trends, etc., to all the players. And I think it's important to identify the internal capabilities as well as where needed to reach out for partners for collaboration to bring value to the customers, because at the end of the day there are two important things: what the consumers need, so there should be a problem or opportunity to solve at the beginning, and how I think the forces in the organization come together and collaborate to reach out a solution for that identified opportunity or problem. Mathieu, anything to add?
I think that's a good point. Yeah, I think loads of different human centered design practices that we see and we've been using. I think we continue to wrap up our design research capabilities to be able to really understand the consumer. I think today we gave you an example of some of the trends. There is more information. Hopefully we can connect with many of you to share more of these insights. So that stay true and remain really relevant to understand our consumer. And we see differences across markets as well. I know we have people joining us from many different places across Europe and beyond. So I think that's important. It's going to be different across the market. And I think what helps as well, what we see helped in the past, is bringing these experiences to life very quickly. I think we're all battling for resources, making the big decisions, getting an organization behind a new proposition and a concept. And so I think being able to quickly come up with a proof of concept, quickly come up with this experience and how it could be brought to life, what it would mean and look like for a consumer, is something that's also very important. So try to bring elements of the proposition earlier in the decision-making process rather than at the end. And we try to battle on PowerPoint and Word document to get approval before we go down the development side. So I think we should sometimes invert a bit the way we do things, and we realize that people are more and more willing to understand what does that mean looks like. And I think most of the decision makers now are closer to user experience than before, and so we tend to bring that forward and help our client bring that earlier in the process as well. So it means design, it means different sets of skill set that you need to bring in your mix and bring them earlier.
Brilliant, thank you guys. So we've effectively used up all the time. I think the content of the presentation has been absolutely fantastic. So Mathieu, Asli, thank you very much for your presentation today and your insightful comments. And look forward to speaking with you soon.
Thanks, Alex.
Thank you so much. Thanks everyone for your time. Thanks a lot.
Bye-bye.
Bye.